Hello, Jeremy. It's really nice to see you once again, and it's always a pleasure to have discussions with you. I think the episode that we've done was really in time, like explaining the people, the story, and how the infrastructure in banks, they built in silos, and how you basically need to think differently to build the modern teams and modern infrastructure. Thank you for having the time with us today. So it's nice to see you.
Yeah, nice to see you too, Oyo, and thank you for remembering our great podcast together. I really enjoyed that too.
So today we will jump maybe the same topic a little bit, like you suggested, the real-time banking. And I think it's good to start with the definition, because a lot of people assuming that the banking software and banking infrastructure is real-time, but let's dive deep and explain why it's not actually.
Yeah, I find the word real-time banking a really helpful construct to talk about a lot of the technologies that are transforming banking. There are a lot of concepts, obviously, that are use cases that are being demonstrated for whether it's real-time payments and use of blockchain and stablecoin, etc. But there's also, when people talk about real-time, typically they're just thinking about a sort of new services laid on top of old infrastructure. And I think there's a deeper meaning of real-time, which is an architectural change. And this is where AI as a technology really changes things. Because as we're learning from building from first principles, new technology stacks, whether it's for banking, payments, or wealth companies or similar, the foundational change is that not only are we building on new data context that we own, but also we're building real-time intelligence layers that mean that we've got an always-on thinking layer inside our company, which stops us making multiple decisions. And that is continuous and not episodic. So that's also real time. So I think it's a very interesting concept to allocate these different technologies, and rather than just thinking of them as, okay, how do I use stablecoin? How do I use AI? Actually think of it as a fundamental shift in the way we should think about banking, which is real time.
So I think it's well said, because people are underestimating the processes which are happening on frequency based, like a reconciliation, reports, closing the business day. Like I was astonished first when we started to develop and scale the fintech products, like even doing the cross-border used to be in the time frame of the business hours. So you're collecting the request and then you kind of wait for the specific window to shoot and execute the cross-border transfer. And I think for our listeners, it's really important to understand real time. It means that you don't have to wait some queue to pick up, process, and then give you one time, which is defining in time the answer. And you can constantly see in real time what is going on without the need A, to wait, and B, to kind of collect and perform some transformations and reporting on top of the data. So it's really essential moment to build a new type of infrastructure. And coming back to AI, like, why do you think it matters? Because first releases with the ChatGPT, they were time-based. Like, you're basically asking, like, what is the latest update with the knowledge? Is it something similar that infrastructure will have a real-time ability to kind of go and check around different sources and provide you up-to-date information rather than use snapshots of the data?
Yeah, I think there's obviously, as we think about the architecture for banking or financial services from an AI perspective, AI native essentially, I think, means two or three things. Obviously, it means actually not really, first of all and foremost, the models. It's actually making sure that you have a machine-readable version of your company, first and foremost. That's a really tough ask. And if you're if you're not a new player, it's a very difficult task just in the first place. But then there's two additional layers. One is as I said, an intelligence layer, which is essentially you encoding the knowledge of the company in an always-on, one-time decision framework, rather than making multiple decisions across multiple businesses. And there are a few companies that are really demonstrating this. I've been involved in building some, but the ones you'll know are the likes of Block, Klarna, etc., that are doing this. And then there's obviously the execution or the orchestration layer. And that's, again, we've gone from, I guess, as you described it, banking being batch to maybe being event-driven to now being continuous rather than episodic. And I think that's fundamentally aligned to the architecture. Now, that also then aligns to how does the company actually operate? How do people then operate within an always-on intelligence layer, orchestration layer? Where is the human controls in that? Where are you able to save on the decision-making? That's a new organizational structure that sits around it. But I think it's fundamentally about that. That's where AI is playing a key role. And look, it doesn't have to be very philosophical or high level. We're talking about intelligence now. Well, if you're a bank, it's about always on credit assessment. If you're an insurance company, it's about always on underwriting. It's always on goals-based planning if you're a wealth manager. So it's taking that knowledge that is unique within your organization and then embedding it essentially in a process in the company that is using intelligence, free intelligence that is suddenly available. I mean, token cost aside, but it's free intelligence that we're now got available. If we think of it that way, you say, well, what are we currently doing that I would like to actually systematize and put into my architecture?
It's well said, because in my opinion, it's not rather give the tool for the company, but give the guidance and protocols how to use those tools. So intelligence is not something that someone is sitting behind the keyboard and making all the decisions and correct actions in a specific time, but educating the system to understand what is good or what is bad, and then act accordingly. So it's a new shift and paradigm for working with the financial instruments, I think.
Today, that is either siloed or separated because of companies and the way the company works, and so you're making different decisions in a very costly intelligence environment, i.e. our heads, in lots of different places. And one of my senior engineers said, look, you know, we should really be measuring not how many use cases we got in the company, but actually how many times do we stop making many decisions at the same time. We just make one decision and reuse it across that continuous, reusable intelligence essentially is what you're benefiting from. Now, I'm talking about that as the fundamental shift I think we'll see in banking from AI. The real-time nomenclature is useful as well, because it is also an understanding of how we interacting with the customer suddenly, how we interacting with payment rails, how we interact, because with the help of technologies beyond just the orchestration of AI, but actually in terms of the blockchain, we were able to start envisaging non-batch, non-event-driven, essentially payments for the first time. And I think that's therefore a useful term to describe that we're seeing services as well as in architecture changing fundamentally with these new technologies.
How do you think the payments are changing? Because here on Money 2020, surprisingly, everyone is talking about the stable coins, but I think that the part of more broad picture as agentic payments. So is it going to change the organizations and how they store, how they evaluate the risk? Because having authorized someone in application with the 2FA approval was one thing, but having an agent which is super efficient and can execute thousands of requests and payments in a second is definitely a different approach. Are the organizations ready, or is it going to change this way?
I think it comes up every time you hear about these use cases. You're constantly also they're followed very quickly by, okay, but it needs to be resilient, needs to be compliant, needs to fit within our framework. I think the frameworks will change to actually fit to the new technology rather than just fitting within the framework. We need to think about, again, agent in the loop rather than human in the loop, in terms of how we're thinking about those controls. Everyone, luckily, I think we've moved from a conversation that is just about crypto as a speculative asset, as a consumer, direct consumer business, to a B2B business where it's now fundamentally changing our treasury rails, our payment rails, etc. Now we need to figure out what is the organizational structure, not just technology, but organizational structure we need to put around that, particularly our governance framework. Our governance framework was not designed for that. It was designed in a pyramid of tons of bottom-up decisions being taken, being surfaced based on risk. That's not what we're operating with now. We're now operating, as I said, with quite a good understanding of how our company should operate, what the intelligence layer is. Now we need to figure out how do you govern for the orchestration that may be agentic, but also the ability to actually execute those services, whether they're payments or whatever they are, real time.
Thank you. It's a pleasure, as always, to discuss with you the current happening in the industry, and thank you for your time today.
Great to see you again. Thanks very much.
Thanks, I appreciate it.